Right, Professor of International Business Angela Sales joins me now via Skype from Belgium. And good to have you on the news and the world now. And right here in the studio is Managing Director of Kairos Capital, Sam Chidoka. Good to have you here too. Let me start with you, Angela. Now, the U.S. Treasury has accused China of manipulating its currency. And some analysts say, look, this was to be expected with U.S. tariffs on Chinese products. Is U.S. getting its comeuppance?
Well, that's one way to look at it. When you look at international relations between countries, it's very political. And so using these trades and tariffs and what is called currency manipulation are tools of the game, basically. But the fact of the matter is that everyday citizens are impacted by this. Of course, the U.S. position is that by China manipulating its currency, it's deliberately influencing the exchange rate, which is giving it an unfair competitive advantage in international trade. But we can't let U.S. companies off the hook, when it comes to this. So one of the reasons that this situation even exists is because many of the major corporations have a presence in China, particularly in the manufacturing, and they've chosen to do business with China, which created a trade deficit between the two countries. This year, there was a record high recorded of $900 billion deficit. And so people over here in the U.S. are negatively impacted by that trade. Although from a consumer perspective, we have cheaper goods, but from a production, employee perspective, it's just an imbalance. And so people are fed up. So, to say,
okay, let me
do
bring
we have that coming? Yes,
Let me
sir.
bring it to the studio here with Sam. Did the U.S. underrate the impact of its trade, war or tariff war, if you like, with China?
Well, you could say that. So I believe perhaps the U.S. thought that when all of this started, that China would not reciprocate in kind. But China has shown that everything the U.S. has thrown at them, they've reciprocated in the same dimension. So when the U.S. came about and decided that over $250 billion worth of China products were going to have tariffs, the first tariff set, China replied in kind. Now the U.S. came about again and did another one on $300 billion worth of China products, 10% tariff, and China has also replied in like manner. Now, to make sure that China doesn't lose out on this, what China's done is to sort of devalue their currency, which really and truly has been their monetary policy over time. Because when you have the lower levels of the yuan, what happens is that it aids their export. So you see that the balance of trade between the U.S. and China has the U.S. in deficit.
But is this a manipulation or just a natural outcome of the tariffs?
Well, it depends on whose side you are on. It depends on how you look at it. For the U.S., it could be looked at as manipulation because it happened just after they placed the tariff. But for the Chinese, they can maintain that this has been their monetary policy stance over time of making sure that the yuan is weak so that they can aid exports and they continue to maintain deficit with the U.S. The U.S. having deficit of trade with China, which is really has always been their policy thrust in recent past.
And Angela, let me bring this to you. If we're to look for a way forward, some analysts say, look, all it takes is just a simple phone call between both leaders, Trump and Xi Jinping. But with Trump's tweets, it doesn't look like he's about to back down. What are the wider implications of all of this?
Well, I want to respond to your prior question by just noting that yesterday the People's Bank of China said that the slump in the yuan, which is their currency, was driven by unilateralism and trade protectionism measures and the imposition of tariff increases on China. So to respond to your question, no, it's not a natural phenomenon or occurrence. It actually was done with intent, just to make that clear. But the implications, for the U.S.-China relationships, it creates more tension, between the two countries. And it also begins to shift the global players in the game because, Chinese exporters are going to look for other markets to be able to sell their goods to. And with the currency being devalued, it will make the goods less expensive and more attractive to other companies and businesses around the world that are able to purchase. But for us here in the U.S., what it means is that when we go to buy school supplies and school clothes, and when the holidays come around and we want to purchase toys, shoes, clothes, iPhones, other electronic devices, the prices are going to be much more expensive because the supply will be less and the tariffs go directly to the consumer here in the U.S.
Okay.
You know, with
all
our
right.
current
Angela, let me bring it back to Sam here. I mean, you just talked about the implications for the United States. You are here in Nigeria. You are a player in the economy. Where does Nigeria factor in all of this, considering the fact that China, just like Angela said, is looking elsewhere, you know, for better deals, including Africa and especially Nigeria, especially with our currency swap with China now?
Yeah, so that's one way to look at it, and I'll come back to that. But more importantly, is what it does to our major revenue earner, crude. So with this, what has happened is from Monday even till today, we've noticed a slump in the price of Brent crude. Brent crude futures below $60 now. Bear in mind that our 2019 budget benchmark was $60, and today we're somewhere around $58 for Brent crude. Not good for us. So we are sort of like collateral damage, if you look at it that way. That's what's happening to Nigeria in all of this. Unfortunately, we still rely on crude for up to 80 to 90% of our revenue. And as much as that continues to happen and this trade war continues and continues to drive down the price of crude, and then the tensions you have in the Middle East, it's not good for us. On the other side, in terms of doing business, China looking elsewhere and all of that. So we've had a lot of dealings with China. Our rail project is being done by the Chinese. Our airport project is being done by the Chinese. They are involved in the power projects and all of that. But it's a deliberate action by China to deal with Africa. So they're doing it in Nigeria, in Ethiopia, in Kenya, all across Africa. And so on that, I'm not sure that's a product of this present trade war. What will happen is that China has a deliberate policy to continue to shift to Africa. And so that will continue to happen. But on the issue of revenue to Nigeria, this is not good for us at all.
Angela, this seemingly economic war, is it one that could evolve into a political or even a diplomatic war? And what are the likely outcomes?
Well, I think we're already on that path. I mean, you know, financially, the stock market here has dropped significantly this week. As a matter of fact, we had our worst trading day in 2019, and also the Shanghai composite was down yesterday afternoon by 1.3%. So those are the financial implications. But when you look at the results of financial implications, when investors lose and their profits are down, that means people are let go of their jobs. And then when people don't have an income, you know, they turn to other means of survival. And so it can escalate down at the grassroots level, you know, the family level, the community level, just because when people are in need, they begin to take different actions. But also the political pressure can, you know, continue to create more tension between the two countries. I mean, there's other players that come into the equation because we are in a global economy. Other countries are impacted, such as Nigeria, but also Japan, other countries in Asia. Even Canada has a hand in this because part of this issue started with the Huawei company and the technology that, you know, was being used with the information systems, and that's on the technology front that helped escalate it. But we all would look for a diplomatic solution because we cannot afford to be in any type of military conflict, particularly when we have domestic terrorism that we're dealing with here already in the U.S. And so,
okay, Sam, any winners, losers? Last one, brief, one word.
I'm not sure. I think they just have to resolve this. There's a lot happening around the world, and a trade war between China and the U.S. is not healthy for the world economy right now.
We'll have to leave it there. Angela Sales, Professor of International Business from Belgium, via Skype there. Thank you so much for joining us. And Managing Director, Kairos Capital, Sam Chidoka. Thank you so much for joining us.
Thank you.